Hello students, welcome back to Accounting 1303, Introduction to Accounting 1. This is Dr. Mercado, and in today's lecture we are going to be covering content from Chapter 9, which deals with payroll accounting. In this case, we're going to be dealing with the employer taxes and reports. The specific problem that I am going to be covering in this lecture is Problem 9-7A. Just a friendly reminder, before you begin working on any of your assignments, please ensure that you read the entire chapter in its entirety. Great information is provided in the chapter. Read it twice, I would recommend. That way you get a better understanding of what is being covered in the chapter. Okay? Sometimes it's a lot of information being provided to you at once. Either read it in sections or read it once, let that information sink in, and then maybe a couple of days later go back and reread the chapter. That way you can get a better understanding of the information being provided. Now, this specific problem that we're going to be covering covers all of the different taxes that employers are responsible to pay. We're going to be having to do several calculations, and I'm going to demonstrate that in a minute when we cover the problem. Now, your textbook does a wonderful job in explaining all of the taxes that the employers pay. Okay, so the chapter starts off by stating that most employers pay FICA, FUTA, and SUTA taxes. Okay, FUTA and SUTA taxes are paid only by the employer. FICA taxes are paid by both the employee and the employer. Okay, so it goes on to explaining what the employer FICA taxes are. Employer FICA taxes are levied on employers at the same rates and on the same earnings basis as the employee. Whatever the employee pays for FICA taxes, the employer matches it, okay? So the same taxes apply for the employee and for the employer. The employee FICA taxes were covered in Chapter 8, so please make sure that if you're not familiar with that or you don't recall, you go back and reread Chapter 8, okay? So the FICA taxes vary every year. There's amendments being done to them, so we need to be on top of that information. Now, we are running with a textbook, so we are going to be going with the information provided in the textbook. Now, for our textbook illustrations, the data that is given to us that we're going to be using is a rate of 6.2% on a maximum earnings of $160,200 for each employee. What does that mean? That means that an employee is going to pay 6.2% of taxes on the first $160,200 of earnings. If an employee makes more than $160,200, anything above that threshold, above that cap, will not be taxed anymore. So the employee and the employer will only pay taxes of 6.2% on the first $160,200. Okay? On the Medicare tax, there is no cap, there is no maximum, so you are going to pay 1.45% on all of the earnings. Okay, so regardless of how much money you make, you will pay 1.45% of those earnings. So it's very important that we differentiate. Social Security has a cap of $160,200. Medicare has no cap. Social Security has a rate of 6.2%. Medicare has a rate of 1.45%. Okay. Now, self-employment tax, those are for individuals that are self-employed, that they run their own business. Okay. Now, because these individuals are self-employed, they don't receive a salary from an employer. Guess what? They're stuck paying double the taxes. Okay. Why? Because if you are working for a company, okay, you're working for a business, for FICA purposes, what's going to happen? Okay, the employee pays a portion, the employer matches it. Okay, they pay the same amount. They put in the same amount. The employee pays in, the employer matches that, and together the taxes are paid. If you're self-employed, well, you don't have an employer to help match that amount, so you're going to be liable for the entire amount. So the self-employment tax for Social Security is double. That means that if you are self-employed, you're going to pay 12.4% for Social Security, and you are going to pay 2.9% for Medicare. Okay, for a total of 15.3% taxes, just FICA taxes, for if you are self-employed. Okay, so that's something to consider if you are if you are self-employed, that you are going to be liable for all of the taxes. You're not going to have an employer that's going to contribute half of those taxes for you. Okay, so make sure that you read that information carefully. Now, the FICA taxes are paid as stated by both the employee and the employer. Now, the FUTA and SUTA taxes, those are taxes that are only liable to the employer. Okay, in very strange cases, okay, just there's some random states out there that the employee will be subject to some of the pseudo taxes, okay? But those are very rare, and I don't think that we're going to cover any of that in this particular course because it is an introductory accounting class. Just know that for pseudo taxes, there are some states out there that do uh, collect some of that taxes from the employees, okay? But for purposes of this chapter, we are going to just assume that the FUTA and the SUTA taxes are only paid by the employer. The employee will not be putting anything into it, okay? So the FUTA tax stands for the Federal Unemployment Tax Act, is levied on employers only, okay? It is not deducted from the employee's earnings, okay? And what is the purpose of this tax? Well, we collect this tax to administer the combined federal and state unemployment compensation program. So this is kind of like just to run the program, okay, to administer the program, okay. Now the rate is 6%. On the first $7,000 of earnings for each employee. So the FUTA tax is only assessed on the first $7,000 of earnings per each employee. Once the employee makes more than $7,000, no more FUTA tax will be withheld. Okay, it is only withheld on the first $7,000 of earnings per employee. Okay. But employers who pay state unemployment taxes, which everybody should, are eligible for a credit of 5.4%. So at the end of the day, your FUTA tax will only be 0.6%. 6% is the rate, 5.4 is the credit. Your net FUTA rate will be 0.6%. Okay, so that's the rate that we're going to be running with. When we're dealing with the FUTA tax, we need to remember our net FUTA rate is 0.6 on the first $7,000 of earnings per employee. Okay. Now the SUTA tax is a state unemployment tax, is levied on employers in most states. Okay, and it says in most states because in some rare states the employees put into it. Okay, but we're not going to go into that in this course. If you ever take payroll accounting, in that particular course, we do cover unemployment taxes in a lot more detail than in this course. This is an introductory course, and we're not going to confuse you at this point. So like I stated, if you are majoring in accounting and you will be taking the payroll course in the future, we will learn more about this topic. Okay. Now, for purposes of this course, the SUTA tax is assessed to actually pay out unemployment benefits. So if you file unemployment, the unemployment money that you receive comes from the state unemployment tax. Okay. We are going to be using in this particular problem or in this particular text a rate of 5.4%. Okay, on the first $7,000 of earnings per employee. Once again, the cap is $7,000. The rate is 5.4%. Now that is not correct per se. They're giving you kind of like an average here. Every state varies. Okay, so like I said, in the future we will, if you are majoring in accounting, we will learn more about the state unemployment tax. But states have an experience rating system that encourages employers to provide regular employment to workers depending on how many people you send to the unemployment office, and a whole bunch of other factors is what your rate is comprised of. Okay, we're not going to worry about how the rate is comprised of in this particular course. Rather, we're just going to worry about the calculation of the state unemployment tax using the rates provided. Okay, so we are giving a rate of 5.4% on the first $7,000 of earnings. Okay. If an employer has very few former employees receiving unemployment compensation, the employer qualifies for a lower state unemployment tax rate. It incentivizes you. If people are not going to the unemployment office, why should you pay a higher rate? So your state unemployment tax rate does vary. Okay. So these are the information that we're going to be provided to be able to solve our problem. Okay. We remember FICA taxes are paid by the employee and the employer. FUTA and SUTA taxes are paid by the employer only. Okay. So now let's get to the actual problem that we're going to be solving. This is problem 9-7A, and we're going to be calculating payroll tax expense and preparing a journal entry. So, selected information. from the payroll register from Ebbeling's Dairy for the week ended July 7th is shown below. The SUTA tax rate is 5.4%. The FUTA tax rate is 0.6%, both on the first $7,000 of earnings. Social Security tax on the employer is 6.2% on the first $160,200 of earnings, and Medicare tax is 1.45% on gross earnings. We are given a list of employees, their cumulative pay, and their current weekly earnings. Using the data provided, we're going to calculate the total employer payroll taxes for these employees. Once we calculate the payroll taxes for the employees, we're going to prepare the journal entries to record the employer payroll taxes. Okay? Let me go back to the notes. In your textbook, there is a section that outlines the specific steps that you have to complete to be able to do your journal entry. Okay, so it says the steps needed to prepare this journal entry for employer payroll taxes are as follows. Okay, step number 1, you're going to obtain the total earnings and the taxable earnings amounts from the earnings. Okay, we're going to figure that out. We're going to compute the amount of the employer's Social Security tax by multiplying the Social Security taxable earnings by the rate of 6.2%. Step number 3, we're going to compute the amount of the employer Medicare tax by multiplying the total earnings by 1.45%. So you see the difference between step 2 and 3? In step 2, we're going to calculate the Social Security taxable earnings. In step 3, we're calculating the total earnings. Why? Because in step 2, Social Security has a cap of $160,200. Anything above that cap, we don't tax. Medicare has no cap, so total earnings will be multiplied by the rate of 1.45%. Step 4, we're going to compute the amount of the FUTA tax by multiplying the unemployment taxable earnings by 0.6%. Step number 5, we're going to compute the SUTA tax by multiplying the unemployment taxable earnings by 5.4%. And then once we're done with all of our calculations, we prepare the journal entry. Okay? And everything is outlined in your book. We just need to read. Okay? So here we have the information. Okay? The first thing that we're going to calculate is how much of this current week's pay is subject to be taxed for unemployment compensation and for Social Security tax purposes. We're calculating the taxable earnings. How much of this week's pay is subject to be taxed? This is not the amount of the taxes, but rather how much of this week's paycheck will be taxed. Now let's tackle the unemployment compensation column first. We know that for unemployment, we pay taxes on the first $7,000 of earnings. I have a cap of $7,000, okay? So we're going to focus and we're going to look at the current weekly earnings to be able to figure out, okay, do any of these week's earnings subject to be taxed? Now, we're going to look at the actual problem. We're going to look at Caitlin Click. How much has Caitlin earned before this paycheck? Okay, so before this paycheck, Caitlin had already earned $6,650. So let's get our calculator out. Okay, we know that we are going to charge taxes for unemployment on the first $7,000 of earnings. My cap is $7,000. Okay, this employee has earned wages of $6,650. That means that they only have $350 to reach the cap. Okay, anything above $7,000 is not taxable. Okay, so the employee earned $800. Okay, so that means that out of the $800 that they earned, only $350 will be taxable for unemployment compensation purposes. The $350 will allow Caitlin to reach that cap of $7,000. So what did we do? We got the cap minus the cumulative pay, and that tells me the amount that I am left to reach my limit of $7,000. Okay, so the employee earned $800. From the $800, only $350 will be taxable. So for unemployment compensation purposes, only $350 will be taxable for Caitlin. Okay. Now let's look at Michelle. Okay. So Michelle has earned 6,370. Remember, my cap is 7,000 for unemployment. Michelle has earned 6,370. That means that $630 are subject to be taxed. Anything over that is not going to be taxable. Michelle earned $720. From the $720 earned this week, only $630 will be taxable for unemployment purposes. So that means that $90 will not be taxable. So from the $720, $90 will not be taxable. $630 will be taxable. Okay, so we get the 7,000 minus the 6,370. That means 630 will be taxable for unemployment purposes. So that means that any future money that Michelle makes will not be subject to be taxed for unemployment purposes. Okay, so Kaylin and Michelle, both this pay period have reached the cap. So any future money earned in any future periods will no longer be taxed for unemployment purposes this year. Okay. Now let's look at Aaron. Aaron has earned $33,460. Aaron has earned more than the 7,000 a long time ago. So Aaron is not subject to any unemployment taxes. Okay, he doesn't have to pay any more unemployment taxes. He's already reached and exceeded the 7,000 cap. Let's look at Marcus. Marcus has earned 6,930. Remember, the cap for unemployment is 7,000. We subtracted by the 6,930. That means that only $70 will be taxable for unemployment purposes. Okay. Let's look at Drew. Drew has earned $158,850. So Drew has already surpassed the cap of 7,000. So Drew does not have to pay any unemployment taxes this pay period. Mark is over the cap of 7,000. So Mark does not have to pay, we don't have to pay any unemployment taxes for Mark. And Matt, we don't have to pay any unemployment taxes for Matt because they've exceeded the 7,000 threshold. So from this week's pay period, the only amount that we are subject to pay unemployment taxes on is on $1,050. Okay, only 3 employees are below the 7,000 threshold. Those are the only 3 employees we are going to pay unemployment compensation on for this pay period. Okay, we're going to do the same thing for Social Security. Now for Social Security, we just have to remember that our cap is $160,200. What does that mean? That means that we're going to pay Social Security taxes until we reach that cap. Anything above $160,200 will not be taxable, okay, for Social Security tax purposes. So we have to identify, have these employees gone over the cap? If the answer is yes, well then they don't pay any taxes. If the answer is no, well then we have to figure out how much of this week's earnings is subject to be taxed. Let's look at Caitlin. Caitlin has earned $6,650. Caitlin has a long ways to go before reaching the cap. Okay, so that means that the entire $800 that Caitlin earned this week are subject to Social Security taxes. Okay, everything that she earned is going to be taxed because she's only earned $6,000. The cap is $160,000, so that means that everything that she earns until she reaches that point will be taxable. Okay, let's look at Michelle. Michelle has only earned $6,370. That means that from this week's paycheck, okay, you're looking at how much is subject to be taxed from this week's paycheck, not the cumulative pay, but the current weekly earnings. That's what we're calculating off, okay? So this week, Michelle earned $720. How much is going to be taxed? The entire amount is going to be taxed for Social Security because Michelle has not reached the cap of $160,200. Let's look at Aaron. Aaron has earned $33,460. This week, Aaron earned $1,200. how much of it is going to be taxed? The entire amount, because Aaron has not reached the cap of 160,200. Marcus has earned $69.30. This week, Marcus earned $900. How much of this week's pay is going to be subject to Social Security? The entire amount of $900. Now we get to Drew. Now Drew is very close to reaching the cap. Okay, my cap is 160,200. Drew has earned 158,850 before this paycheck. So that means that from this upcoming paycheck, which Drew earned 4,440, only $1,350 are going to be taxed. Anything above that will not be taxable. So we need to remember 1,350 will be taxed. Okay, so what does that mean? Okay, that means that Drew earned 4,440. Out of the 440, 1,350 is taxable and 3,090 is not taxable. Okay, so let me illustrate here just for purposes of what we're doing. So we're going to look at Drew. Okay, so Drew earned $4,440. Okay, and I'm going to put here taxable, not taxable. Okay, so okay, this is Drew weekly pay. So this is how much Drew earned this week. Okay, let's illustrate so that way you can see what is it that we're doing. Okay, so Drew earned $4,440. Okay, so we calculated. Okay, let's delete this. We have a cap of 160,200. And Drew has already earned 158,850. That means that Drew only needs $1,350 to reach the cap. This is the taxable amount, $1,350. So from the paycheck of $4,440 that Drew earned, that means that we're going to pay taxes on $1,350, and on the remaining $3,090, that is not going to be taxable. Okay, so the pay is $4,440. How is that distributed? We're going to pay taxes, Social Security taxes on $1,350. We are not going to pay any taxes on anything above the cap of $160,200 of $3,090. So we're splitting Drew's pay between the taxable and the non-taxable point. Now I am concerned about the taxable. How much taxes do I have to pay for Drew for Social Security? Well, I still need to pay $1,350 in taxes for Drew. That $1,350 will take me up to my cap of $160,200. Anything above $1,350 is not taxable. So the $3,090 in excess will not be taxed for Social Security tax purposes. Okay. Now we look at Mark and Matt. Both of them are in the 30 ranges. Okay. So that means that both of these employees have a long way to go before reaching the cap. So that means that everything that they earn this week are subject to be taxed for Social Security tax purposes. Okay, everything is taxable because these two employees have not reached the cap of $160,200. Okay, so now we're going to add them together and let's figure out how much is subject to be taxed for Social Security. Okay, so the only employee that went over the cap for Social Security was Drew McMahon. Okay, Drew is a high earner. He was the one that went over the Social Security tax cap, and this is how we illustrated it down here. Okay, so now I'm going to delete this because I need the space to be able to do our tax calculations. Okay, so now we've calculated my taxable earnings. Okay, for unemployment, from this paycheck, my employees earned $10,430. From those $10,430, I only have to pay unemployment taxes on $1,050, and I have to pay Social Security taxes only on $7,340. Okay, so let's do our tax calculations. Let's do our Social Security tax first. Okay, for our Social Security tax, we're going to pick up our Social Security taxable earnings, which is the $7,340. Okay, we're going to pick up the total from here. Okay, and my Social Security rate is 6.2%. Okay, so let's get our calculator out. 7340 times 6.2%. That gives me $455.08. Okay, so that is the amount of my Social Security tax. Remember, when you're calculating your Social Security tax, you look at that total right there. Okay. Next, I'm going to calculate my Medicare tax. Okay. For your Medicare tax, there is no cap. Okay. So it says here Medicare tax is 1.45% on your gross earnings. So for Medicare, I'm going to go ahead and I'm going to pick up the weekly earnings. Okay. So for Medicare, I'm going to get the $10,430. My rate is 1.45%. Okay. And let's see what that gives us. Okay. So we've got 10,430 times 1.45%. That's going to give me 151.235. We need to round. If that third digit is a 5 or greater, that second digit is bumped up. Okay, so then that means that my amount will be, where's my calculator? 151.24. 151.24. So that's my Medicare tax. Remember, Social Security and Medicare, those are your FICA taxes, okay? And the FICA taxes are paid by both the employee and the employer, okay? Now we're going to go to the FUTA tax, okay? For the FUTA tax, we're going to be looking at the unemployment compensation column, okay? So for my FUTA tax, I'm going to get my 1,050, and my FUTA rate given in the problem is 0.6%. So we're going to go ahead and we're going to multiply the 1,050 times the 0.6%, and that'll give me $6.30 of taxes, okay? Then last but not least, we've got our SUTA tax. Once again, we're going to pick up the 1,050. We're going to look at the unemployment compensation. That is for both FUTA and SUTA, okay? And I'm going to multiply by my SUTA rate. The SUTA rate given is 5.4%. Okay. So we're going to go ahead and we're going to calculate 1,050 times 5.4%. That gives me 5670. Okay, so let's do 5670. So now we can get our total employer payroll taxes. This is what the employers are responsible to pay. So we're going to add up all of the amounts. We're going to add up the 455.08 plus the 151.24 plus the $6.30 and the 56.70, and that gives me 669.32. That is the total amount of payroll taxes the employer has to pay. Okay. So this is my tax calculation. Step number 1, you have to calculate the taxable earnings for both unemployment purposes and Social Security purposes. Remember, your cap for unemployment is the first $7,000 of earnings. Your cap for Social Security is the first $160,200 of earnings. Okay. Once you tally up your totals, that is what you're going to be using to calculate your taxes. Social Security is going to be using the Social Security taxable earnings. Medicare is using the current weekly earnings. And FUTA and SUTA, the unemployment compensation taxable earnings. Okay. So now that we've done that, we can move on, and I forgot to set up my journal, okay? So let's go ahead and set it up real quickly. We've got the date, the description, the debit, and the credit, okay? So now we have to actually do the journal entry for our payroll taxes, okay? Okay. Okay, so here we go. Okay, so we're gonna go ahead and we are going to begin, okay, with and let me go ahead and put here general journal. Okay. Okay, so we're gonna start off with the journal entry. Okay, let's see what it says over here that we have to record. Requirement 2, we're going to prepare a journal entry to record the employer payroll taxes as of July the 7th. So my entry is dated July the 7th, okay? So we're going to go ahead and we're going to start off. We're going to go ahead and we're going to debit my payroll tax expense, okay? How much am I paying in my payroll taxes expense for the period? Well, the total that we calculated is down here of $669.32, okay? That is the total that we're going to pay in employer payroll taxes. So that is my debit of $669.32, okay? Now we're going to go ahead and we're going to put the money into the different accounts. Remember, we only collect the money for the taxes, and then on specific point in times, depending on the tax, we have to remit payment to the different taxing entities. At this point in time, all we're doing is we're setting the money aside for the payroll taxes. That way when we have to pay them in the future, the money is already sitting on the respective accounts. So let's go ahead and first start off with my Social Security. So I'm going to have my Social Security taxes payable. All of these amounts are going to go into payable accounts because I owe that money. That money belongs to someone else, okay? So my Social Security taxes payable, we calculated it at 455.08. We're looking at our calculations down here, guys, the 455.08, okay? Then I have my Medicare tax payable. For my Medicare, we had allocated 151.24, okay? Then we have our FUTA tax payable of $6.30. And then we have our SUTA tax payable of $56.70. Okay. Okay. So what did we do here? What we did here is we recognize that we have a payroll tax expense. The business has an expense to pay payroll taxes because they have employees, and employees cost money. On top of paying wages, we are also responsible to pay for payroll taxes. Well, how much payroll taxes do I have to pay for this week's earnings? Okay, well, for this week's earnings, we calculated sum of taxes, and these are the taxes that we calculated for a total tax amount of $669.32. So I'm going to record my payroll taxes expense for the total of all of my taxes. And then I put the money into the respective payable accounts. That way when I am getting ready to remit payment to the different taxing entities, I just take the money out of there and cut them a check. Okay? So this is what's going to be the entry that it needs to happen to be able to record the employer's payroll tax expense. Okay? So every time that you cut payroll, you also have to figure out how much taxes, payroll taxes that the employee have to pay, and we have to do the calculations and the journal entry to set the money aside for those payroll taxes. Okay? So that is requirement B. Remember, the debits must always equal the credits. So let me make sure that they do. Debits must always equal credits. If they don't, then you made a mistake somewhere. Okay? And they do. My debits equal my credits, so we are in balance. Okay? Just make sure that you do get in the habit of making sure that your journal entry is in balance. Okay. So this is it for this particular problem. Please read over your ebook. It has valuable information. A lot of great examples is being provided to you. Please make sure that you clearly understand what the cap for unemployment is versus the cap for Social Security. Once you calculate your taxable earnings, then you just simply grab your totals based on the tax that you're calculating. You multiply by the respective rates, and that will give you your employer payroll taxes. Okay. For the journal entry, payroll taxes expense will always be debited, and the respective payable accounts will be credited for the different amounts. Okay. So I hope that this provides some form of guidance to you when you're solving your homework. Please practice. Remember, you have 2 attempts on your homework. The highest grade is retained. I encourage all of you to use the 2 attempts provided to earn the most points possible. Okay, so that is it for this problem. Until next time, have a wonderful day. Bye-bye.